All right, what's going on, guys? Tremaine here. We got a market review for today, Wednesday, July 10th, 2024. So, looking at the daily chart here for Nasdaq already, you can see we had a pretty nice expansion day after yesterday's price action on Tuesday, closing the day indecisive with this doji candle. Today's price action, nice and bullish. We'll take a look at that on the lower time frame. As far as key levels go on the daily chart, didn't really have any. We are trading at all-time highs, so we have no price action looking left. And when that's the case, that just means you have to use key levels on the lower time frames, 1 hour, 15 minute, 5 minute, and then pay close attention to the dollar index. But bias obviously was bullish. Okay, there's no reason to predict that we topped off. Okay, we don't predict highs in bullish markets. We don't predict lows in bearish markets. All right, we're just going with the trend. As retail as that sounds, okay, in this instance for long-term bias, okay, we're bullish on the day, but we'll look at both long and short setups and when those setups formed intraday. So let's drop down to hourly chart. So right away, okay, this is pretty much the highlight of today's market review. Midnight opening price. Okay, this has really been a theme for the past week. I even made a video about the midnight open. You can check that out on my YouTube channel. But where we open at midnight, okay, your best opportunities to go long are going to be below the midnight opening price level. Best opportunities to go short is above the midnight open. All right. Down close candle before this rally higher is a bullish order block. We drop down, trading into the opening price of the order block, yes, but also trading just below that midnight open. That's where smart money accumulates their long positions, and then they send it higher. 15-minute chart. Okay, we have your AM silver bullet 10 to 11 o'clock New York time, PM silver bullet 2 o'clock to 3 o'clock. All right, that's what you're seeing here with the gray shaded area. Buy style liquidity. This was Nasdaq's previous all-time high. Okay, you can see we took that out. Notice here, equal lows. We snap down at 9:30. We don't take out this low. So Nasdaq leaves equal lows. Okay, we leave sell side there. We rally up, clearing the buy side, making new all-time highs. We sell off. Where do we sell off? Below the sell side, yes, but also below the midnight opening price. We rally. All right. Let's look at a little bit more detail here on the 5-minute. All right, so again, here's that previous all-time high, buy side liquidity. We have a low here. We move away pre-market. We trade down at 9:30, fail to take out this low, and we leave. We clear the buy side, and what do we leave intact? Relative equal lows. Notice where we are in comparison to the midnight opening price. For those in the Discord, you know that I kind of implemented this in my trading plan the past couple of weeks, but if we're far above that midnight opening price, I'm not looking to buy. Okay, Nasdaq can rally 100, 200 handles. It could throw buy setups all day. I will not take it if we are this far above the midnight open. Okay, I want to be a buyer below the midnight price or a little above it. Okay, it's fine buying here, here, or here, not a problem. But you will not see me buying or taking a setup to go long if we're this high above the midnight open. Okay, so keep that in mind. We rally up, clearing the buy side. Okay, using this fair value gap institutional order flow entry drill. This is also a balanced price range. Single pass down with this fair value gap here. Single pass up with this fair value gap. 3 consecutive down close candles. That is a bullish order block. Okay, we trade down into all 3 of those PD arrays. Clearing the buy side, break lower. Balanced price range. Okay, on the 5-minute chart, there's no reason for price to revisit this fair value gap. Okay, it's balanced. Single pass up, single pass down. We do have a small little volume imbalance here that we trade into. Break lower, fair value gap. Okay, this is your silver bullet on the 5-minute time frame, targeting sell side. But what is it actually reaching for? We're getting back below that midnight opening price, and then we reverse. Okay, fair value gap here as we head into lunch, trading down into that. These 3 consecutive down close candles, that's 1 bullish order block. We rally, trading into the opening price here, coupled with the fair value gap. That's a high probability order block. We rally, volume imbalance, trading down into that, displace, down close candle before this rotation higher, bullish order block, draw that through, This is all during lunch. That's what you're seeing with this gray shaded area, or orange rather. Trading down into that. We rally, consolidate a little bit in the PM session, and we'll look at this final hour macro on the 1 minute time frame. All right, so let's drop down into our last time frame. Got a little bit more insight here. All right, let me drink some water, catch my breath. Feel free to pause this if you want. But again, previous all-time highs here. We rally above that, clearing the buy side. Okay, there is no price action above us, so we're not aiming for any buy side up here or any premium arrays. Okay, once we take out this high, we're trading in no man's land. I'm not interested in chasing this higher, one, because yes, we are trading near all-time highs, but two, the midnight opening price is all the way down here. So if we know that your best opportunities to go long are below or near this midnight open, am I interested in buying something all the way up here? Absolutely not. Now, can we trade down into this fair value gap and rally 50, 70, 80 handles? Sure. I won't be a part of that move. Okay, you see me talking about that in the video I posted earlier today. Clearing the buy side, we consolidate a little bit. We get this energetic breakdown. Okay, breakaway gap. I don't want to see this fair value gap traded to. That is a breakaway gap. 2 consecutive down close candles here. That is a bearish breaker. Okay, I highlighted that in today's stream in the Discord. We have a high, low, higher high. Last 2 down close candles in between your 2 highs. That is your bearish breaker. Okay, draw that through. And we also have a fair value gap here. Trading into it here, failing to take out this high. Retrace, trading back into the fair value gap once more, failing to take out this high. Finally gives up the ghost and breaks lower. We have a fair value gap here. This down close candle is a mitigation block. Okay, I don't have it drawn out just for the sake of keeping my charts clean and not clustered. But we have a high, low, lower high. Okay, these 2 highs here make this a mitigation block. Okay, not a breaker. If we were to make a higher high than this high, this down close candle here would be a bearish breaker. But because we have a high, low, and a lower high than this one, this becomes a mitigation block. Draw that through. Okay, also laying on top of the fair value gap. We trade into that, sell off. Last up close candle before this rotation lower, that's a bearish order block, also coupled with the volume imbalance in here. Draw that through. Perfect. This candle here opens, trades up perfectly to the opening price, and we sell off. Down close candle here, bearish breaker, high, low, higher high. Take this candle here, draw it through. We trade down, rally up, selling off, taking out the sell side. But not only are we taking out the sell side, where are we actually going? Back below the midnight opening price. Why are we heading back below the midnight open? Because your best opportunities to go long are below, at, or just above the midnight opening price. Trading down into that, clearing out the sell side. Smart money is accumulating and buying those sell stops, and they're accumulating long positions under that midnight open. Okay, that's an area of fair value. Notice this occurs during that 10:50 to 11:10 macro. Okay, 11 o'clock is profit taking hour. So I'm not expecting a continuation to the downside as we approach 11 o'clock, because as we all know, and as I teach in the Discord, 11 o'clock is profit taking hour. You can expect some sort of retracement or a complete reversal. So we cleared sell side, trading beneath the midnight open, and we're approaching 11 o'clock. That checks off all the boxes to expect a possible reversal. I have this light bulb here. This is your 2022 model. I know a lot of people trade that model. I personally don't. I would take this setup. So I guess you could say that's the 2022 model, but that's not the solely basis of me getting into a trade. But we trade down, taking out sell side, wait for a market structure shift. We retrace, rally up, take out this short-term high. That's your market structure shift. Do you have a fair value gap? Yes, you do right here. You could buy here. We run away, come back inside the fair value gap, buy it there. That's your 2022 model. Target buy side here. We have equal highs, way too smooth here. Okay, there's a lot of profit objectives that you can aim for. Okay, there is no wrong answer. Whatever you're willing to hold out for your trade or take partials. All right, so we rally up, reversing after trading below the midnight open. We get to the lunch hour, 12 o'clock to 1:30, fair value gap. Leave majority of that open. That tells us we're bullish. Okay, we failed to even reach midpoint, consequent encroachment. Okay, staying near the high of that, we rally, blast through this high, making new all-time highs in the Nasdaq. Fair value gap, down close candle, bullish order block. Boom, rally, 2 consecutive down close candles here. That's another bullish order block, draw it through, trading down into it here. One more time, perfectly here. We rally, fair value gap, trading into it there, consolidate a little bit ahead of the PM session once more, trading inside the fair value gap, rally a little bit. Now, PM session, silver bullet hour, 2 o'clock to 3 o'clock. Just like how the best buying opportunities are below the midnight open, I only really care about the midnight opening price until we get to about 11 o'clock, okay? Once 11 o'clock hits and we enter lunch in the PM session, I'm not really referring to the midnight opening price. Instead, I'm looking at the 1:30 p.m. New York time opening price, okay? So this is your 1:30 candle. This is where we open. Same thing, okay, same rules applies as if this was the midnight opening price. Your best opportunities to go long are below the 1:30 p.m. price level for the PM session. Best opportunities to go short above the 1:30 p.m. open, all right? PM session consolidates, nothing worth talking about here, but we drop down after clearing the buy side. Okay, we clear this sell side, yes, but where are we really going? We're taking out sell size, smart money's accumulating those sell stops, buying those sell stops at a cheap price, but we're getting just below that 1:30 p.m. opening price. That's a discount. Down close candle here, all right, bullish order block. I'm taking mean threshold of that. I want to see down close candles start offering support. Notice how we were traced down, unwilling to close past mean threshold of the bullish order block. Then we rally. This again right here is your 2022 model. Okay, I know a lot of people trade this. Clearing out sell side, dropping down. Okay, we wait for a market structure shift. Wait, come down, we rally. Taking out this short-term high, but do we leave a fair value gap? No, we don't. Drop down once more, small little fair value gap in here, but I'm watching this order block. We rally. We displace with the fair value gap, clearing out this high. Boom. There's your 2022 model. Target the buy side. All occurring during the final hour macro, 3:15 to 3:45 p.m. New York time. Okay. This macro will run against liquidity that's left in the PM session. All right. Where are traders making money right now once we approach 3:15 and 3:45? We already cleared the sell side. So people who are breakout traders or have stop losses below this low, they're already taking out the market. All right. If you notice this low here, we rally up, drop down, clearing out sell side underneath this low. So where are traders feeling safe as we head into the 4 o'clock close? Up here, buy side. Well, that's when the macro comes in. We have this 30-minute window. Let's get them out of the market before 4 p.m. Fair value gap, drop down, we rally, down close candle, bullish order block with the fair value gap, drop down again, rally, down close candle, bullish order block, come back down, beautiful there, and then taking out the traders who thought they were going into the close with a profitable short position, making new all-time highs. Okay, we consolidate into the close. All right, so that is it for today's market review. Please like, comment, subscribe, share the video. Okay, as you guys can see here, I have a lot of chart annotations for you guys. I do all of this for your guys' benefit, and it does take up a lot of my time. Don't get me wrong, I love doing videos like this. It helps me study as well. Okay, if I didn't have a YouTube channel, if I didn't have a Discord community, this is exactly how I would study and back test. If you're finding any value in this, if this is helping your trading anyway, okay, leave a comment below, message me in the Discord, wherever, like the video, subscribe, which motivates me to keep putting them out there. But I am live trading. For those in the Discord, pay members, we're back live trading tomorrow after CPI, okay, 9:30. Hopefully we'll find a clean setup then, and then also trading the AM session on Friday and maybe the PM session on Friday, depending on what we get. All right. Love y'all. Be safe. If you need anything, message me either privately or publicly in the Discord. Okay, I respond fast. I'll make sure to get back to you as quick as I can. But until then, I see you guys in the market tomorrow at 9:30. All right, peace.